Hey everyone, it's been a while since I've done a recording, but today I will use video to capture my thoughts on the index, on the Dow and on the Nasdaq. So if you take a look here at the Dow, a couple things, what I really wanted, hopefully can relay in this video is when I write my newsletter, I kind of operate on a week-to-week basis, trying to call which direction we're going to see for the week, if it'll continue up or maybe take some rest or have a pullback. But I want to zoom out a little bit more to describe maybe what we're seeing here. So this is, I'm going to zoom out. This is the daily chart, and I'm going to zoom out just to about here. So January of 2022, we entered a bear market. And so that means that everything typically, not typically, everything was in a downtrend going down. That doesn't mean that we didn't have opportunities to trade to the upside, but when the overall market is trending down, those up trades, especially if you're doing longer holds in a stock position, are not going to last. So these up and downs have to bottom out, and here in October of 2022 is when we hit that bottom of that bear market. And so from there, we had this great next leg that was pretty flat. So we had this huge rise, and then by December, everything was up, down, up, down, up, down, up, and then down. And when you zoom out, you see that it was more of a flat, I don't want to call it a base because, I mean, it is in the zoomed out version, this is its own separate base, right? And well, I don't want to say it is a base, but the bases that I typically talk about in my newsletter are for the short and intermediate term trading. So right here, a base is anything that falls below. So we don't know if it's a base or a pause here and then it continues up. But right here, we've hit an area, tested it twice, fell down, and then this potentially was the bottom of the base. You maybe traded that up. Here maybe is in the base again, but you could see these were pretty failed moves. But if you look at here, this was a nice long base, and then whoever was able to trade that up to the upside. Those are the smaller bases within the bigger bases. So what I'm talking about today is kind of the bigger moves to give you an idea of like what is going on potentially in the market. We've definitely entered a period where we have, it's the, it is the best few or several months of the market. So starting here in October of 2023, you can see that we started the bull market. And if you were trading, there were some very, very hot trades in January. A lot of traders, including me, lost money starting probably February, not seeing that change. So from here to here, that was probably, let's take a look, how long? Date range. So from here to here, 47 days. So this was quite a bit of an explosion up. And when you have a rise like that, then you also are waiting for that rise to be digested. So if you don't understand or see that that move needs to take a breath, then you can get caught up in these swings. And for less experienced traders, you will maybe put on some shorts here, then stay in too long, put on some calls here and stay in too long. and not realize that this is not, it's definitely tradable, shorter term trades, 1 to 2 weeks. But if you're looking to hold on several weeks to several months, I hope everybody's okay. I don't know if you hear that. It's the fire truck. All right, so what I wanted to talk about here is, so we've got this rise, and this is very choppy, and if you are more to the intermediate term trading, it's rough. You want to wait that out, but you can take some shorter trades. But let me not get too off topic. Big rise, needs some time to rest. This here was that time to rest. And I kind of made that oval a little bit wide because yes, we spiked up here, but that move failed and needed one more. What this is right here is the institutions shaking everyone out to get their better price. And you can tell because it was a pop-up, then down, a pop-up. It's like that manipulation of like, ooh, we're going to take off right now. And then it's like, nope, ooh, we're going to take off. So people are buying in here. Here, I can zoom in a little bit. People are buying in here, and then ultimately those moves fail, but they're not very big fails, like if we measured it. So here to here, 7%. That's very much in line with those who are even intermediate or long-term or position traders. Typically, you want to set your stop. You can set your stop however you want, right? It's definitely based off of you and your metrics, but the professionals typically set a stop between like 5 to 8%, up to 10%, maybe 12%. That's well in line with that. So here's that shakeout. And from there, we now have spent all this time kind of in this sideways place in a bigger picture kind of setting, and we're taking off again. So will we see, this is 146 days. If I measure here, let's see, I measured from the bottom here. So if I measure from the bottom here, we're in this about 75 days. So the other point I want to make is when we have a long base like this, it's almost like if you'd imagine roots, like it's this grounding in order to give the market a strong foundation to rise from. So there is a quote, the bigger the base, the bigger the move, that is that's attributed to William O'Neill, but there are a lot of traders and investors before him who said the same thing, but he's the one who made it that short and sweet saying, so you can remember the bigger the base, the better, bigger the move. And this is what I think we're seeing now. So we had that downtrend here, that flat road, and between this rooting down, now we're going to see a more bullish type of market. And this move up took a pause, and I think that we're going to continue up at least through probably February. Now, that doesn't mean just go out and dump all of your money into the stock market. What it does mean is that anything that you're in, keep an eye that it's also trending with the market. And if you see any failed moves, don't be shy to reduce your position or get out of it, but also don't be scared and just close your positions because of any pullbacks. And that's what you want to see here too, because as you can see, we're not in this market here anymore. So anything that pulls back is different. This will pull back, rise, but then go down even further, versus this. It went up, pulls back, rises, goes down, yes, further, but it kind of is in a stabilized place. So this direction is down, this direction is sideways, and now we're in a place where, yes, we are seeing pullbacks and consolidations, but in general, our move here is up. All right. That's my drawings for y'all. Okay, so I'm going to take a look at the NASDAQ really quick here. So NASDAQ's a little bit different. Find it to be it was just rocking and rolling. Here is going to be your 2022. Okay, so 2022, same thing. All right, sorry, I don't really have a lot of mouse space in my let me just consolidate that so I don't have to move my mouse so much. Same thing, went down, flat road. I've been back on the Peloton, so reminds me of flat road. And now we have probably, again, since this one was in January of last year, started that bull rise. So we've got that bull rise base here, again rising, little pullback, rising, and now this is a little bit more messy, so I can't really I don't have a lot of opinion on that right now, just because, as you can see, the areas that I highlighted are a little bit smoother, but this one, this here is just a different shape. So we had 1, 2, 3, third time's a charm, and took off, a pullback here, took off, and now this whole move has been digesting, and think that this was pretty much the lowest we're going to get for now. And let's measure this move here. 255 days. Wow. And then very, very possible that we're going to continue up whatever set amount of days. I'll go ahead and go from here. Oops. And, if we do repeat something like that, look at that. So about 200 days would take us to February. Just some thoughts, some ideas. If you're newer to trading, this is what you're looking for. This was the down market. For the NASDAQ, we started the end of 2021. Then we stabilized here. This was the last of the lows. Then we pulled back, very, very sweet looking cup and handle. Boom, love that. And then if you were re-entering the market 2023, now you can see that we're in a bull rise or a rising market or bullish market. So as you go into your trading and everything, today I'm giving this zoomed out view, and the zoomed out view is not really going to help with those who do day trading, shorter term trades. But if you are more of a swing trader that is at least holding your positions for several weeks or several months, then if this holds true, one, that we're maintaining the bullish sentiment in the market, and then also that the pullbacks won't be as low as the more recent lows, then there is a good bit of upward energy that could carry us through into the new year. I have only been doing this about 6 years, so this is not any kind of advice, but just sort of what I'm seeing. And my newsletter really follows like the week to week, so it's nice to kind of just take a step back and look at what we are in for in the coming next few months. All right, y'all. I hope you enjoyed. If you have any questions, let me know. If you have any comments or you see something differently, definitely let me know. This is totally a collaboration with my community as we learn to become better traders and investors. All right, bye.